We've got full team coverage of this chaotic market day. Carter Worth is ready to break it down with the charts. We've got Canaccord's Tony Dwyer waiting in the wings as well. Let's get first to Carter and the charts. Carter.
So lots of things to look at, of course, and lots going on. But first, it really, when things are in chaos, correlations often go to one. And just to make that point, not only today, but of course over the past year, look at the relationship between the NASDAQ and the S&P 500. In fact, it's a correlation of about 95%. What we do know, of course, is that one has more beta. So the NASDAQ overshoots, the NASDAQ undershoots, the NASDAQ overshoots. But the trajectory, of course, is the same. The straight down, the straight up. And what Guy's talking about, of course, is the prospect of an important double top back to a difficult level. Let's look at a few things. Gapping. It's very rare to gap, meaning an index has got so much news overnight, a tweet or a war, or it could be anything, swine flu, that it gaps down or gaps up. There have been a total of 79 times the past 2 years when the S&P has gapped up or gapped down. There are only 3 unfilled gaps, and they are all below. So let's look at those levels, and it's a good reference point. March 12th gap is still in play at 2784. March 11th, 2744, and of course down at February 12th, 2718. From the peak of 2954 to the, were we to fill that final gap, we would have a sell-off of about 8%. We know we're down to 5 now, so really it just shows that's not a whole lot. That would just be the beginning, and then you could get to levels, as Guy suggested, 2650 for a 50% retracement. In any event, here are those levels. What we know is that the odds, again, there were lines all along through here. All of these gaps, they've all been filled. These are the only 3 unremaining gaps that are filled, and by all accounts, I think we're going to swing down and catch those. Take a look at the same thing on the NASDAQ. There are 3 unfilled gaps. Again, the betting is that we're going to come down and swing and catch those, and ultimately that would be a peak-to-trough decline of a minimum of about 8%. And I think that's an important thing. Now, Apple. What do we know about Apple? It peaked the same time the market peaked in September. It bottomed the same time the market bottomed, Christmas. But what it could not do, of course, is it could never make it back to its high. So sort of feeble. It also dropped 40% from peak to trough, twice as much as the market. And not only could it not make it back to its high, it is a fairly textbook break-in trend. Not good. Gap today, speaking of gaps, you can see it right there. Apple is a place I would not want to be.
All right, Carter, thank you for the charts.